When silver makes a move, the moves are enormous. Where in this market is there room for Russia or any country to start buying silver? The supply is not available. In the absolute end game, you could see gold at $10 an ounce offered on COMEX and no bids, and $100,000 bid in the cash markets, but no offers. That we would get to a point where no one would release gold, no one would release silver for any fiat price, because, fiat being viewed as nothing.
In today's silver headlines, CTAs will continue to buy silver. While a few false dawns have emerged in the past, spot and futures prices are both finally breaking out of the wedge that has contained silver markets from the 2024's local top not reached since 2012. TDS's senior commodity strategist Daniel Gali notes, a confirmed break from the wedge may attract further interest. The breakout in futures markets is relevant as it is likely to catalyze CTA buying activity, which directly attracts new directional inflows, which may become self-reinforcing. The break north of $31.55 per ounce in SIH5 will only force CTAs to buy plus 4% of their max size, but CTAs will continue to buy silver in nearly every scenario for prices over the coming sessions, barring a sharp reversal akin with a big down tape. A confirmed break from the wedge may also attract further discretionary trader interest, particularly with gold prices pushing towards all-time highs, given evidence that while this cohort may be involved in the EFP dislocation, they remain directionally flat. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
My thought process with gold and silver, the market is so much smaller. It's probably not even a tenth of the gold market. I've all along called silver the fuse to the golden nuclear bomb. You cannot have silver go into a default status and gold ignore it. I mean, it would immediately be followed by the gold market. You'd have buyers left and right. And I mean, we're at the point now. Let me just talk about inflate or die, Richard Russell's famous saying. From a debt standpoint, because it's a Ponzi scheme, you have to continually create more debt to feed the Ponzi monster. If you don't feed the debt, then the debt collapses. So they're going to feed the debt. But when you feed the debt, what you're doing is you're expanding the money supply. So if money supply is going up 5%, 7%, 10, 11% per year, yet gold and silver production is static or slightly declining. What's happening is, it's the classic, too many dollars chasing too few assets. And it's that way, it's that way system wide, because GDPs are only growing worldwide at 2%? But yet money supplies are double, triple, quadruple that just to keep that 2% growth. So it's a dangerous situation. And like you said, when gold blows, confidence breaks, and that will literally blow up the entire derivatives complex across the board, which includes all sorts of commodities, all sorts of sovereign treasuries, equity markets across the world. The derivatives market gets taken down when gold becomes unavailable, to deliver. I have said that ultimately, when all is said and done, there is going to be a failure to deliver on COMEX for both gold and silver. And I think it will start with silver. I've said that all along. And now, now that you've got, the demand that we've seen out of China, out of India, out of just the solar industry alone, it literally eats up all of the global supply.
In today's news recap, gold prices above $2,800 as U.S. core PCE rises 2.8% in the last 12 months. The gold market continues to see solid bullish momentum, with prices trading above $2,800 an ounce as U.S. inflation data remains stubbornly elevated in line with expectations. The Core Personal Consumption Expenditures Index, which excludes volatile goods and energy prices and is the Federal Reserve's preferred inflation gauge, increased by 0.2% last month compared to November's rise of 0.1%, the U.S. Department of Commerce reported Friday. Consumer prices rose in line with consensus estimates. Over the past 12 months, core inflation rose 2.8%, unchanged from November's reading. Meanwhile, headline PCE increased by 0.3% last month and 2.6% for the year. The gold market is not seeing much reaction to the latest inflation data, continuing to trade with solid bullish momentum. Spot gold last traded at $2,804 an ounce, up 0.31% on the day. Analysts note that the latest inflation data presents a mixed picture for gold. Elevated consumer prices will likely prevent the Federal Reserve from cutting interest rates anytime soon. However, the fact that inflation remains unchecked poses a threat to the economy, reinforcing gold's safe haven appeal. The report also highlighted robust consumption growth, with personal spending increasing by 0.7%, up from November's rise of 0.4%. The data exceeded expectations, as economists had forecast a 0.5% increase. The latest consumption data is likely to support expectations that the Federal Reserve will keep interest rates unchanged for the foreseeable future. On Wednesday, Federal Reserve Chair Jerome Powell stated that the central bank is in no hurry to cut rates this year, given that inflation remains elevated and the labor market remains healthy. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Silver comes out of the ground at just under 10 ounces for every 1 ounce of gold. So God's ratio is, let's call it 10 to 1. Man's ratio right now is 88 to 1. For hundreds and hundreds of years, it was 16 to 1. So if God's ratio is 10 to 1, why did man settle on 16 to 1? And that's pretty simple, because years ago, 150, 200, 300 years ago, if you were going to transport capital or pay, you had to transport the metal. And because you had to transport 10 times as much silver by carriage, by horse, by whatever, man discounted silver because of the inconvenience. And I believe in the Constitution, the U.S. Constitution, it's 15 to 1 or 15 and a fraction to 1. And the world settled on 16 to 1, basically to compensate for the inconvenience of having to transport 10 times the weight, 10 times the size of what you could do with gold. Because there's been a concerted effort for 100 years to suppress the price of silver. Actually, you could go back to, I think it was 1897 in the U.S., when there was the big fight between the East Coast, the gold people, and the Western markets that were digging up a lot of silver. Uh, I mean, it goes back. So it goes back 125, 130 years. The price suppression. At this point, think about the uses of silver. I mean, there's so many uses. There's industrial uses. There's technological uses. There's medicinal uses, and now we've got the green energy uses. So there's so many more uses for silver, and there's almost no uses for gold other than jewelry and reserves, bank reserves, or individuals holding it. So there's so many uses for silver. What if you woke up tomorrow morning and silver was $200? What would happen to a lot of the products, a lot of the uses that are in place right now? What would happen to those? Some of those, probably many, maybe more than half, those uses, the model wouldn't make sense. I mean, that would bleed through to the entire system, where you would see an inflation of all sorts of goods in all the uses for silver. Would that upset the whole system? I don't know, but I know it would certainly upset a lot of industries.
What do you think about Bill Holter's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below. Do you see silver and gold skyrocketing soon, or do you think the squeeze might ease up? Let's discuss it. Now, check this video right here because it's a perfect fit for you, and I'll see you on the other side.